Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it's been a topsy-turvy start for 2023 as the Australian dollar ends the Thursday session lower as fresh evidence of a strong labour market in the US, along with hawkish comments from US Fed policymakers, gave the stronger case for the US Federal Reserve to stay aggressive with rate hikes in order to cool inflation. In overnight data, the ADP National Employment Report showed a higher than expected rise in private employment in December of 235,000 jobs, missing the forecast of 150,000 increase. Investors will now be closely watching the Australian and US CPI data out next week to gauge some assessment on how the Fed will view rates at the start of this year. Looking ahead though, we still have the crucial data that's out on later today, which is the non-farm payrolls. The US Bureau of Labor Statistics reported that the total non-farm payrolls employment increased by 263,000 in November, with the forecast expected to see a lower number for December of 200,000 jobs added, and the unemployment rate is expected to hold around 3.7%, as the same to November. If we do see a stronger number, that could give a bit more impulse to the US dollar, as it trades currently around 104.88 after surging back above 104 overnight. So looking at the technicals, we can see that the market's rejected that 68.45.55 area and now focusing back on that key support, which is seen around 66.60. I do anticipate that we may see again good demand or fresh interest around that level, with the market viewing beneath there the 60-day moving average, which is around 66.23. We haven't fully broken down in terms of how the market is looking to a bearish case, but we could see a little bit of weakness that might find bargain hunters return in front of that level of 66.60. So therefore, we shouldn't abandon the top side level around 68.45.55 as of yet, as we may see another challenge. The euro was weaker overnight, as I mentioned. Stronger data to the labour sector did give boost to the US dollar. As I mentioned, we are waiting for the non-farm payrolls number, but given the fact that the market has broken down and taken out the support level around 105.80 has given further case to a target now, which is seen around 104.20 as initial objective, and reassess from there. Keeping an eye on the dollar index, because if it does break above 104.90, which is where we are now, could see a rally onto 106. That would provide the case for a weaker euro. Technically, we have broken down, so I do feel that there will be a little bit more supply coming into the euro and more demand into the US dollar. Since the posted hammer that was seen earlier this week from 130.50 has continued to hold its bullish case and getting very close now to the objective, which I see around 134.50.70. Reassess from there, as a break would give further evidence to a rally of 138 figure 10 as an objective, where I've outlined here. Nevertheless, the market is holding positive, so I feel dips will be shallow, and therefore anywhere from 132.40.60 to expect the rally on, as I mentioned, to 134.70.90. Looking at the pound, the market came in heavily, and with the trend strengthening to the bear case, saw the break of 119.60 and now opens the path to 118.45 as a potential target. Reassess from there, the market might find a little bit of momentum as we head into the US session, and therefore could see renewed demand, but I feel that the market may be a little bit on the heavier side due to the break of 119.60, but reassess from 118.45. Looking at the Gulf, the market was a little bit heavier overnight, as we can see that the rejection from its objective, which was around 1,854 to 56, now looks towards this level, which is somewhere around the level of 1,816 as a potential target. In light of the pattern, though, I feel that the bears are coming back and therefore could see further risk to the bearish case, but do keep an eye on the US dollar because that's the key factor. If the dollar does rally further on the non-farm payrolls numbers, then that would give further weight on gold. But reaching this objective and the turnaround does support a downside case, but keep an eye on these technicals to support that view. Wrapping up with oil, for the markets, I feel, is posting a flag to the bearish case, and that would indicate that further downside pressure may emerge, either towards the 73 or $71 a barrel as an objective. Technically, we remain negative, so any upside attempts may give opportunity for fresh short positions and seeing the cap around 76.2030. Well, that wraps it for the week. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoyed the great start to the new weekend.